Okay, we are live and I'm going to share my chart. Let me know if you can't see the chart when I share it. Coming over to it now. Right, so everyone here should be able to see we've progressed from the Black Friday promotion to now the Cyber Monday. But technically, this series of day 3 webinars commenced during the Black Friday promotion, and we're just crossing over to the Cyber Monday promotion. So this is all that is on offer for those that may not already be members, or those that are deciding whether to continue as members. This is everything that you get with the premium membership, and you're getting a huge 75% off. And if I come over to that link on the website where you can grab hold of that, I'm going to put this link into the chat. So if anyone wants to take the dive, then there's the link. Right. So what I want to do then is touch on where we've come from already. So for anyone that hasn't been following, no, not that one. Let's go over here. Well, in fact, might be able to find it quicker over here. Okay, just switching over to my channel. Get rid of this. So we've done a series of videos. The last one we did was the day 3 behavior of price. Before that, we did the day 3 look for the levels. So all of these videos you can see on my YouTube channel, and also within the Discord. If I just bring up the Discord channel, you'll see them in the educational section over here. So you can just as easily grab them if you're not already in the Discord from the Discord section. So that's the first one there. That's the looking for the levels, and this is the what is day 3 essentially. All right, so those 3 videos there. Now, if anyone wants them in the chat, let me know, and I'll put it in the chat, those links. But let's get on with today's then. So today's title is, if I recall, basically time rotations. So we're monitoring for the price to react at certain times of the day and within the week. Okay, so it's all pretty self-explanatory stuff. But what we'll do is we'll just go through some of the setups from today and see how they ended up. So today is Friday, day 3. Let's look at spot gold. Either or, doesn't matter. But this is, I think, what most people are familiar with. So this is XAU USD. So we had Friday. So as we've discussed in previous videos, we reset Wednesday. Bear with me. We reset our week on Wednesday to day 1, day 2, and Friday, day 3. And we're looking for these types of parabolic moves on day 3, which will be a Friday, or if we're looking at the Monday, Tuesday, Wednesday template, so Monday, Tuesday, Wednesday, we're looking for the parabolic movement on a Wednesday. Now, you'll note that we didn't get anything, right? It was range bound. It was a range bound day on Wednesday, day 3, but there were plenty of opportunities elsewhere on day 3 on Wednesday. So if you're not seeing your setup and a parabolic opportunity on the day for a particular instrument, then you simply swipe left and move to another instrument, whatever the case might be. Swipe down or up, depending on what your watch list is, right? So, and how it's configured. So swipe down, swipe up. Right. So looking at gold, and we're talking about time rotation. So as we came in to the session, which for me, my session starts, my actual trading time will start at the end of the hour of the New York Open as per currency market. So the New York Open is 7 a.m. And I like to watch how the price behaves in that opening hour until around 8 a.m. And then from 8 a.m. onwards, that is my trading window up until, say, lunchtime, depending on how the market's behaving at the time. So does everyone see the chart? We're getting someone saying they don't see the chart. Well, I'll simply reshare it. Just bear with me a second. Right, you should be seeing the chart now. Just let me know that you can see that. It's quite temperamental, this Discord thing, but so yeah, okay. And those that couldn't see the chart, can you now see it? Um, so I'm coming into my trading window, and the first thing that I'm looking at, can anyone hazard a guess? What is it that I'm looking for at this point? Hopefully by now, some of you that have been following this trading process will have a checklist of things that we're looking at. So there's a couple of things that I'm looking at straight away. Number one is, where is the price at the moment? Is it at a level? So can anyone tell me, is this price, based on yesterday's market range, is this price at a particular level when we're coming to the screen? No voice? Yeah, there is voice. Right, I'm just going to reply to this chat or this member. Give me a second. Also, guys, if you're not using the app, I'd advise using the app instead of the web browser. I think that gives you a better connection. Because there are some people that can hear, some people that can't see the chart, so it's all a bit all over the place. So perhaps that might fix it. I'll reshare my chart again. Okay, so that's been reshared. Okay, great. Thank you for letting me know. Right, the chart has been reshared, and there's nothing I can do about the voice. The voice is working. My microphone is on, and other people can hear me. So this is being recorded, so I'm just going to progress. And anyone that's finding difficulties, whether you can't see the chart or can't hear, if you can't hear, this is being recorded, and you can re-watch it later. Okay. So what level are we at, guys, when we come into my trading time zone? So it's the 15-minute chart. What is the level that we're at? So this level is the closing price of yesterday, of Thursday, okay? So that's some good information. The closing price can either act as support or resistance. So in this case, what else can we see? We've seen that the market has dumped down. It broke the high of the previous day and it's dumped down. So we can be in anticipation. If we see a dump, we can be in anticipation of a pump. Okay, very simple stuff. There is nothing genius about this strategy. It's just simply looking at, well, if the market has dumped, we've got sellers engaged, stop losses, people pulling their stop losses down into break even, into profit, trailing the market. And that is all fuel for the smart money to target. So the smart money is accumulating at the low of the day, at the closing price, right? And they're going to have buy that sell stops, so buys. So they're going to want to sell what they're accumulating to all the buy stops, right? So you've got sellers putting in their buy stop, right? And then you're targeting those buy stops. If you're long of a market, you need to sell to something. So where are you going to sell to? You're going to sell to the market orders that are in here and above this high. Okay, so we figured that out. So we are biased long. We are biased long. And then what we're looking at is the time of day. So these time rotations, what we need to understand is that as day traders, we are riding the order flow from higher time frame investors and traders. So higher time frame, I'm talking about the 1 hour, the 4 hour, the daily chart. So as the price breaks those levels, so on a 1 hour chart or a 4 hour chart or a daily chart, once we're getting these breakout traders in the market, we're riding along with them. So obviously this is today's market, but we had breakout traders from Monday, Tuesday, Wednesday engaged. We got a pullback, and that pullback has pulled back to a closing price. The closing price, that was the pullback, right? And we've got sellers all in here, all engaged. We've had a move up into those sellers. So job has been done, orders have been filled, and we progress back to the downside. Okay, into longs. Okay, job done, closing price, pause, consolidation. Okay, and when we get consolidation, and if you've got any questions along the way, just put them in the chat. And if I'm going too fast, I'll go over what I'm talking about. But if I don't get the questions, I presume that everything's being understood. So we continue. Now, what I'm looking to do is get long of this market from the closing price, but I want confirmation that we're breaking the trend. So we've gone over this before, market structure, behavior of price. So that market structure is bullish because we've broken this high. All right, so we've broken that high, but I want to be long from the closing price. So what I could have done is put on a starter, right? I could have figured, right, we've come down, we've pumped up. This bullish engulfment is saying to me that my thesis could be correct, and I'm going to take the plunge. Okay, so you could put in a starter, so you could get long here, any one of these candles, this one or that one up here. You might want to have your stop below the low in case you're wrong. And then your target would be potentially the high of the previous day, the high of today, whichever one you fancy. Neither is wrong or right. It's just part of the process. Okay, if there's no screen, I suggest, hold on, I'll reshare it again. So at this point, you can put a starter on, feeling that, right, it's come off the closing price and it could just keep going. All right. And you're doing so at a timing rotation. So this is the 15, the minimum timing rotation for me is 15 minutes. So at the 15-minute candle, you can go long. You could have gone long, presuming that the 8 o'clock doji, taking your cues from that 8 o'clock doji, and you're just getting in a little bit late. That's fine. But ideally, you want to do it at the timing rotation. All right. Now, the reason why you do it these timing rotations is because they're usually followed by a significant move on the next candle that immediately puts you into profit. Immediately. And if you're not getting the behavior of price that you should be getting from this strategy, which is a parabolic move, where you can really just start adding to the position, taking some off, moving to break even, all very, very quickly. If you're getting anything that is counter to that, then you're probably wrong and you should look to get out of the trade as soon as you can. Or be comfortable with being in drawdown and the market playing games with you and then potentially coming down to your stop loss. All right. But again, if you go in small as a starter, you're not worried about that. Okay. Anyway, so we move on. So we're long of the market and it comes back in to where? The closing price. It's come back into that closing price, which continues to act as a support. Right. So that's confirmation that this closing price is likely to be our bedrock, our foundation for our move to the upside. All right, so we're on the backside of that old bearish trend. Check. We've broken structure on the inside of that trend over here. So check. So all of these things are adding into our bullish profile. The closing price is support. Check. Okay, so now we're just monitoring the time of the day. So 8:30 didn't give us anything. 9 o'clock coming up. So we're coming off the closing price again. What happens at 9 o'clock? Where is the market? Right, we're monitoring this. Okay, dropping back into the closing price. Will it hold? Right, so I'm not doing anything at the moment until my next timing rotation slot, which will be 9:15. Okay, 9:15. What's happening? Still just consolidating. Right, now what's going on here? 9:25. All right, we're starting to potentially build a bullish bias here again. So at 9:30, Wall Street open. Right. So you've got our first entry. We had a bit of drawdown. And now it's 9:30 Wall Street. What is the bias? 9:30 timing rotation. What is the bias? This closing price is giving us the bias, the level, the behavior of price. Okay, consolidating. Now we're moving up. Okay, so we can go in again at a 9:30 time rotation, stop below the low, or you can put the stop back at where you had it in the first place. Doesn't really matter. Um, I would be inclined to move my stop up personally to just below the closing price because we've already had that drift down into drawdown. The thesis is that we're going up. This should be a parabolic move up. It shouldn't come down into the low of the day. it's had its opportunity to come down to the low of the day. It didn't. The closing price held it up. Bulls are engaged. They're hungry for this downtrend. So we go in again. So we've got some of our risk on. We're adding to that risk. Okay, we've broken a fresh high. We can add some more and target done. Okay, and that was due to the timing rotation. All right, 9:30 a.m. The next timing rotation is 9:45. So let's see how the market reacted at 9:45. What happened? 9:45. Got a bit of hesitation, a bit of a pullback. You'll see that on the 1 minute chart. Okay, so at 9:45, a bit of consolidation. And then what happened at 10 o'clock? Over here. 10 o'clock, we got another bullish engulfment. Huge move. You see, so these timing rotations are giving you these moves where you can add to your money, add to your market, add to your trade, or take money off. So, if you want to take money off as you're heading towards your target, so you're locking in profits, then by all means. And if you did that, say at the next 10 o'clock rotation, or if you added the next 10 o'clock rotation, so now we're looking at 10:15. What happens at 10:15? We get a bit of a drop. All right, so you might be thinking, right, well, this could well be a sizable move to the downside. I'll take some money off. Okay, and then at 10:30, you could be adding again if you want to ride this for the rest of the day. I'll just come out of bar replay mode now. So we're on the 1 minute chart here. And this, as you can see, this was effectively an all-in day. This just kept going and going and going. But as you can see, the timing of this trade is at 9:30 a.m. Wall Street open. The first entry was based on round about the 8 o'clock open, the 8:15 candles, the 9 o'clock candles, right? So the timings, rotation, 15 minutes. Okay, so that's essentially it. So that's bringing this all together now. So you're the time of the week, the day of the week, where you are in the week, the structure of the week, the structure of the day, the levels. Where is the price? Is that a closing price? Is that at the high of the day, the low of the day? Is it the high of yesterday, the low of yesterday? Is it at last week's lows? Look, here's a sterling yen trade I took today. So the sterling yen trade was done at the low of yesterday. So it's just ongoing, really. It's not really ideal. It's not a parabolic. I mean, the entry gave rise to a parabolic move, but we just moved sideways. But that's not the point. The point is the level and the timings. 10:45, up she goes, right from the low of yesterday. Okay, yesterday's low. There it is, that white line. So it came down to the low, and I'm in on this candle. Came down to the low, 10:45. Bear with me. Go on the 1 minute so you can see it properly. $10.45. There it is. Entry and up. Okay, so timings, guys. All about the timings. Levels, behavior of price, and timings. That's all it is. Does anyone have any questions? That was just going to be a short webinar as a continuation of what we've been talking about prior. If no questions, we'll just wrap this one up. It was a short presentation all about the 15-minute timing rotations. If I didn't have a trend line to break, take your today's, what's the YM? Did you mean sterling yen? Or which what's the YM? US 30. Okay. US 30. US 30 trend line is there. So as you can see, broke the trend and off she goes from the closing price. That was the closing price. And then we also got where was the other? There was another trade later on in the day, not one that I took, but I mean this is the high of yesterday, Thursday. This was another trade. You could have got long from in here. Because at this point you're on the back side of that trend now, so the thesis is going higher. And then what did this do? This came into the high of the day again. We got bullish confirmation to continue going up. But again, timing rotations, 11 o'clock. Right? 11 o'clock, high of day, in you go. High of yesterday, I should say. All right. So yes, you want your market to be the behavior of price. It wants to be on the other side of the trend line. If we can use candle formations, 10, 15 minutes instead of 1 to 5 formations. Yes, you can. So you can look for bear with me. You're just not going to get keen. You're just not going to get an optimal entry because you're. Let me show you. So 15-minute chart. So this is the US 30. There's the trend thereabouts. Okay, so that trend, as you can see, is much further out than, say, this one here. But nevertheless, on a 15-minute chart, so 9:15. At 9:15, it's up to you. What do you decide? What do you think? That is a bullish candle. So you've got your pin hammer, your bullish candle, bullish engulfment. You can go long. Stop below wherever you want to put your stop. But for me, that's why I like to use a tighter candle. Say the 5-minute you could look at. And my stop loss would be based upon the 5-minute candle, probably, for a bit of a keener, more aggressive entry. But there you go. Yep, you can use the 15-minute, of course. Any other questions? All right. Okay, so we'll wrap this up then. And if you don't see the buyer sideways movement, you just wait. yes, you need to see what you're looking for. So let's look at this Dow, for instance. So our trading, let's look at it from the trading hour. Now, I'm ideally going to be trading the equities nearer to the Wall Street Open, but that's not to say you can't trade from, say, 8 a.m. It's up to you, but this is what you're getting at 8 a.m. today. Sideways stuff. You don't want to be involved in that. And then we come to our Wall Street Open, and we've got that candle just before it, right? And you've got Wall Street Open. Okay, so you could just be getting long of that on the 5-minute chart. Stop below the low, stop below the closing price, stop below the lows, up to you. I'll probably just get it in pretty aggressively and targeting. Now, what you can do in this instance where you don't have, when you're already quite high up in the session, I mean, you can have your target if you wanted here, but you're looking for asymmetrical risk to reward. You really want to be minimum of a 2R trade. But you can measure the consolidation of the day. So from the bottom of that to the top, and you can look for, say, a 1%, a 100% expansion of the range, perhaps, or something more conservative. Like 2R, you get your 2R there. But the question is, if you don't see any bias sideways movement, you just wait. Yes, you wait based on your timing rotations. So at 8 a.m., where am I? Right, I'm around the closing price. Interesting. Okay. Now I want to see the price behavior and I want confirmation. So I've got this bearish trend that we're in at the moment. And until we get out of that bearish trend, which wasn't until just before the Wall Street Open, 9:25, have I got this sort of bottoming formation. So I've got like a mini W here, right, which is a double bottom pattern on a small time frame. And then I'm getting, and that is engulfing all of this consolidation in here. So that's a really nice candle there. It's a confirmation that this is probably going to go higher. And then we finally get this candle here, which breaks all of this structure, change of character. So it breaks that trend. And at the end of the day, you know, you've just got to take the plunge. How much more confirmation do you want? You've got the closing price. You're on the backside of that bearish trend. You're 9:30 timings, right? So just go for it. Uh, no, I don't use pivots for this day trading strategy. Um, there's a pivot strategy that I have for um, sort of day trading slash swing trading. But yeah, pivots can be powerful for those strategies that they're used in. Um, but you can think of this simply as a bit like a pivot strategy because you've got the levels. So you're using the closing price in this case, the low of the day, you know, so you've got the low of Asia. So essentially they're like pivot. They're calculated in different ways, obviously, but um, again, it's levels, and whatever it is, whatever criteria you want to put into your strategy is absolutely fine. But this particular one uses the high of yesterday, the low of yesterday, the high of the week, the low of the week, the low of last week, the high of last week, monthly levels, highs and lows. So highs and lows of weeks, days, and sessions. So in this case, it was the Asian low and yesterday's closing price. And we can use the closing price of the days of the week as a level as well. But you'll find that the prior day's closing price is a very powerful level. Okay. So behavior of price at a level front side, back side of the trend. So this is front side until it went backside. So we're now backside of the trend. So you got all of these confluences and you pull the trigger. And then it's just about managing your expectations for the trade and your targets, and how, and the risk that you're allocating to your trade, whether you're scaling in, scaling out, when to do that, and how to go about that. Okay, guys, so we'll leave it there. So that was time rotations combined with behavior of price, levels, and time of day on day 3. And then the final one will combine day 3 with first red days and first green day setups on a day 3. And that is essentially um, a market that is trending, but then has a down day. So if I could find one, so oil for me was, we had a first green day in the UK 100, but let's look at oil. Was a first red day. Yeah, so oil was the first red day, and we got the trend continuation. So we got a number of days pumping up, and then Thursday closed down, and then we got that downside continuation for the trade of the day today. So we'll go over that next week. Okay. Yep, I'll upload this on YouTube. Right, guys, I wish you a very good weekend, and we'll see you again on Monday. And don't forget, if you haven't subscribed to the discount, there it is, up to 75% off. Thanks, guys.